Hello traders, Gary Wagner here. Approximately 2 o'clock in Honolulu, 7 o'clock in New York. It is Monday, first day of March 2021, and this is the daily report for gold and silver. With the exception of gold, we had platinum, palladium, as well as silver move higher on the day. Gold did lose about $6 in trading. It is now in Australia and has a further decline. On today's show, we will look at all four precious metals that are traded on the futures complex to get a gauge of which one is moving in terms of percentage gains the quickest. Let's take a look at the show, and I hope you enjoy it. Gold futures today traded to a low of $1,770.20. It did recover slightly to the tune of $5, but still closed off by $5.70. That's in contrast to the other precious metals traded on the futures complex, which all closed higher. While our technical studies, such as the MACD, and other lagging indicators that in essence are using different moving averages to determine strength or weakness in a market, you can see that we are in a oversold scenario. However, what I find most fascinating, as we talked about last week, we do have the 100-day moving average attempting to cross over the 200-day, and that actually came into almost perfect alignment today. You can see that right here. And at the same time, when we enlarge this chart, you can see that the variance between the 50-day and 200-day has definitely widened over this last trading week. The key is that on Friday, we broke through a key support level in gold. That level was approximately 1750 to 1760. That was a double bottom that was created from the lows of November and the recent lows when we had a double bottom. That all changed on Friday when we had a sharp sell-off, taking gold well below 1760 as it currently tracks at 1723.10. On a technical basis, we don't find any real support coming into the market until approximately 1690 to 1700 per ounce. We could certainly test 1700. While we did have fairly equal lows today, nonetheless, gold has closed lower for 5 concurrent trading days, the last 5 trading days. The sell-off in gold was the polar opposite to silver futures, which gained 20 cents in trading today and is currently fixed at $26.64. Traders, we're looking at a daily candlestick chart with a very, very short-term Fibonacci retracement. The retracement that we are looking at starts from the lows that occurred back in November when silver was trading at $22 per ounce up to these recent highs at the attempted $30 per ounce that hit it on an intraday basis but was unable to sustain that price point. What we are seeing is really the critical level of support that comes into the market comes in just at around $26. That is based on the 50% Fibonacci retracement level of the shorter data set. The other thing that is extremely noteworthy when we compare recent action in silver to gold is that silver is still trading well above the 50, 100, and 200-day moving averages. We defined a golden cross, not in the purest format because this golden cross was between the 100-day and 50-day moving averages occurred at the end of January. We've seen these two moving averages widen. And when we look at convergence, divergence in moving averages, if we're seeing an uptick or a basic market that is in rally mode, you will get a widening of these averages. However, silver does look to be range bound between these recent lows at $26 and $28.35, which is the 23% and 50% retracement levels. And lastly, platinum scored a gain of approximately 0.5%, $5.60 gain, currently fixed at $1,190.90. And traders, as we look at platinum, obviously it did close higher on the day, but it has had quite harsh selling pressure since hitting these highs right here at around $1,310. and here at $1,350. However, we see really strong support for the precious metals at the recent low. This, of course, occurred on Friday at approximately $1,160. If we hold this particular price point, I would look to be a buyer in platinum at $1,165 or better. It is currently trading at $1,190.90. Also, when we compare our moving averages, they're in the proper alignment for a pure bullish mode with the 50, 100, and 200 day. And you can see that we have definitely seen these moving averages move farther and farther apart. Between the 100 and 200 day, they're almost parallel, but between the shortest term 50 day and 100 day, we have had a widening, which suggests that at least for the short and interim term, as long as we test and hold the area of 1165, we will see higher pricing in the future. And traders, lastly, I do want to take a look at palladium futures. It seems as though even though they are the most expensive of the precious metals group, we have solid resistance at about $2,500 per ounce and strong and vibrant support at about $2,200 per ounce. So we have a defined range in which the market is traded for approximately the last half year between these two price points. Palladium futures led the pack today, gaining $36. That's 1.56%, currently fixed at $2,349.50. Traders, however, the extreme value of palladium futures currently at about $2,350 per ounce does not come without extreme volatility. When we look back to the highs that occurred in March down to these lows, you see a market that really moved from about $2,800 per ounce and then fell within a 2-week period to just about $1,350 per ounce. In other words, a decline of about 50% in a 2-week period. Also, if you notice the 50 and 100-day moving averages, we have had this short-term 50 get closer to crossing below the 200-day moving average. Now remember, that is a lagging indicator, so whether or not that will unfold as lower palladium prices is something we'll have to see. It is not something that we're actively trading, but we are actively looking at. For right now, we are remaining flat with a bearish to neutral stance in gold and a bullish to neutral stance in silver. Today's upside moves in the three precious white metals are certainly significant and indicate that the rally in U.S. equities could in fact continue to drive the precious white metals higher in the upcoming days, while gold is still susceptible to the raise in yields in U.S. Treasury notes. And so for that reason, we have to remain neutral to bearish on gold and bullish on the other three precious metals. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.